Why is Cathie Wood dumping Tesla? What is she seeing going on in the market? What did she warn us about? And what concerns does she potentially have as to why she would dump Tesla stock when the stock was up 6% yesterday, 10% today, and it feels like we're just getting started. You can see it right here. ARK K dumps 56,000 shares of Tesla to go buy Archer Aviation, Intelia, Recursion, dumped in ARK W, 6,400, and they even picked up Palantir and ARK Q, different ETF from where some of these Tesla sales were. But why is she dumping Tesla? What is she seeing? Well, first and foremost, any novice technician should know about this, and even fundamental analysts should know about this. We are at a massive test. Listen, Tesla volatility was so low, it bottomed when the stock was around 170 to 180. We talked about it on this channel. We said this is explosive. This stock's volatility, if it goes up, it could average 1.5% a day for the next 60 days, which, yeah, that's like a 90% gain, okay? This is what we've been talking about. Frankly, we're still just at the beginning of this. Like, consider for a moment. We talked about volatility bottoming June 7th. So go to the day chart. Look at June 7th. I know there's going to be a temptation for people to go, oh man, I wish I bought over there, woulda, coulda, shoulda. I know, look, everybody and their mom wishes they had more. There's not a single person watching this video right now that isn't like, nope, don't wish I bought more. Duh, that's psychology. But we don't have a crystal ball. Even though things can tell us this is likely, you can't YOLO your whole portfolio on call options for 4 weeks out, because if you're wrong, you go bankrupt. It's simple, okay? So don't feel bad about this. Instead, one way to actually make yourself feel a little better is look, this feels like a big move, but folks, it's just 30%. The long run potential of Tesla is not 30%, it's like 5x, okay? So, like, big freaking deal. But there is a huge critical inflection point that we sit at right now, and even a novice technician should know about this. We teach this kind of stuff in the Stocks and Psych course. We teach this kind of stuff in the course member live streams. That's where I'm early with you on all my information. When I see a swing trade, when I see an opportunity, I give you my ideas, I give you my research, and if you like it, you can figure out your own plan. You know, my goal isn't for you to copy my trades. In fact, a lot of people take my information in the course, they're like, Kevin, this is great. I'm gonna go make my own moves off of this, and they do better than I do with that information. I'm like, great. Maybe because they can look at it with a different lens, you know, it's the unbiased lens. But anyway, what's really incredible, by the way, we're doing a July 4th coupon linked down below. So that's active now. You're welcome to check that out at meetkevin.com before the price goes up. So obviously, a novice technician would identify that we are at a major resistance point right now. We literally just ended a tippy tip here on a 2.5-year resistance level. We should crash off this line tomorrow. No, I want to be clear. I do not want you to think I'm being bearish here, Tesla. This is part of the process, okay? This would be very normal. And in fact, so far, it's breaking through it. Look at Robinhood overnight. You're at 233. That's $1.50 to $2 above where we need to be. So according to Robinhood, we're fine. We're already breaking free, baby. Break free. Where's Ariana Grande when you need her? Anyway, this is good. But understand, every single time we have touched this line, let's go to the non-average candlesticks. Every single time we touch it, reject, 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 reject. I kid you not, okay? 2.5 years. Reject. Reject. Oh. Could this be the moment? Or are we going to get rejected here? You see what I'm saying? This is a huge, huge catalyst. So somebody could be really bullish Tesla and be short that moment because it is incredibly logic backed. Now, if Tesla can confirm a breakout out of this, folks, we are going straight to 258. In my opinion, no guarantees, not personalized financial advice. Listen, I told you many times on this channel and on Real Meet Kevin on Twitter and in the course member live streams. As soon as we clear the $200 selling pressure, we break free. The problem is, if we get rejected at 231, we could be revisiting the 200s because people are going to set sells in the 200s because they don't want to be losers selling in the 100s again. Okay, I'm not trying to call anybody a loser. I'm just saying that's a feeling. That's part of the psychology of money. This is the stuff I teach, whether it's here for free on YouTube or in the courses or my trade alerts, whatever. So, what else is there though? Is there anything bearish going on? Yes, there are a few things that are bearish that are going on, and I'm not trying to bring this up to be a bear. In fact, I think a lot of these, well, some of these things can be explained, but let's be clear. First of all, Cathie Wood recognizes there are cracks in the economy. We're seeing personal consumption slow down. We're seeing capital good purchases slow down, capital good shipments slow down, pending home sales slow down. We're seeing continuing jobless claims rise. We're seeing the merchandise trade balances decrease. In other words, we're doing less. We're seeing breadth decline in the S&P. We're seeing a bear steepening. That's what happens when the 10-year treasury goes up. Bro, the 10-year treasury, literally with inflation coming in with good news, over the last week, the 10-year treasury is up 20 basis points. Why, my friends? Why? Why? I mean, I wasn't even expecting this, but, like I go to CNBC.com and I got somebody who's sad. I'm not even reading the title because I'm focused on this video right now, but I go over here to bonds, the 10-year. Look at the 10-year, 4.44 basically. Now, you might be like, Kevin, I mean, that sounds pretty normal. Why is that a big deal? Have you looked at the chart recently? It's okay if you haven't. I don't blame you. But look at where we were a week and a half ago. What? 20 basis points lower? See this hole we were in? Now, okay, I get it. We're back to these levels. But these levels over here were when we had high inflation reports. Then we started getting low inflation reports, and all of a sudden we're going up on low inflation reports. What is going on? But folks, it's not just that cracking that's happening in the economy. There are actually some concerning underlying issues that are starting to pop up right now. Look at what I just tweeted on at Real Meet Kevin on X. What the F is going on? Bears are cooking something. SOFR rate spikes. Okay, this is odd. The SOFR rate spiking is not good. It's a signal of funding stress. Usually the stock market is either down or flat when this happens. Now, SOFR hasn't existed that long. We used to use LIBOR a lot. But if you go back over the last year, you could see some periods of stress November 30th through December 5th, and again December 22nd through roughly January 3rd. And if you look at the NASDAQ during that time, so the beginning of December and the end of the year, you're going to find either flat or down. Okay, so let's go over. So beginning of December is right here. You can see this little trough right here. Super minor, not a big deal, but you had a little trough in the Qs. No problem, happens all the time. Okay, what about the end of the year? Oh, look, it's right here. See this decline? Okay, 412 all the way down to 395. 395 is the new number divided by the old number. That gets you almost a 5% drop. It's more like a 4% drop. But the point is, that's just one issue. But the SOFR rate usually spikes when there's funding stress, when banks are like, we're going to hold on to a little bit more money. So then somebody has to offer a higher overnight yield, and then the banks are willing to let go of money. It's a sign that cash is getting a little tight. That's not good. So we got the 10-year up, the bear steepening in the yield curve. We've got cracks in the economy based on what Cathie Wood is saying. Cracks based on the other things I just read out. Bitcoin, of course. Bitcoin, once again, look at that, double top reject at the 63,840, hits 61.7, bounces, loses it. Now we're sitting at the 68. I've got a purple trade line over here just because we've sat there a few times before. I'm probably honestly going to upgrade this one to a yellow because we keep getting bounced here. Blues are like really powerful, but this is a bearish indicator for trading tomorrow. So I'm very, very nervous going into tomorrow for what's going to happen for Tesla, because I do think that some people are going to think, oh my gosh, no, this means the rally is over for Tesla if we end up red tomorrow. No, that is not what I believe. And I'm going to explain my opinion for Tesla, but I'm just saying the setup right now is that things could go potentially nasty tomorrow. Just saying. Indice futures, which are not just Robinhood's trading and people on Robinhood using that on the 24 or the 24-hour trade windows, indice futures are down. Small cap futures, the Dow 30, S&P 500, the NASDAQ 100, all down. NASDAQ barely though, so not that big of a deal. Maybe this is all a big nothing burger. But let's also be real, when Tesla's skyrocketing 6% and then 10%, the NASDAQ hits all-time highs with the S&P 500. At the same time as you're getting this bear steepening, you're getting alerts that, European military bases are going on high alert. Again, the bear steepening and the SOFR rate spike. Some of these other aspects all coming together along with a cracking foundation. You kind of start wondering, what is going on? Should we be paying attention to something, and are we potentially missing something? I'm going to show you, by the way, what I said about this situation in Europe with the military bases. I'm having such trouble putting this all together, but look at this. I commanded dozens of major bases in Europe for 4 years as Supreme Allied Commander of NATO and Commander of the U.S. European Command. Sounds like a weak beta. We had plenty of scares. I'm just kidding. That's really impressive. We had plenty of scares, but nothing that required this level of alert. Clearly, there is deep concern that is consistent with everything I could see. U.S. bases go into higher safety or higher state of alert. It's like a orange or yellow or whatever. Anyway, so going back to Tesla for a moment. Obviously, we had some cool numbers today. We expect actually the numbers for the earnings report coming up to not be that bad. We'll probably have better margins because commodity prices started falling, although they were still somewhat high in Q2. But lithium prices are coming down, commodity prices are coming down. Frankly, they're probably going to amortize out the cost of buying down people's interest rates. They'll spread that out over a period of time if they can. They should have free cash flow again. They produced substantially fewer vehicles. I mean, the production slowdown is substantial. 14.4% production slowdown. That is a massive production slowdown, which is great, frankly, for free cash flow. So don't get me wrong, this is great so far. The energy storage deployment explosion sure came with price cuts, but batteries typically have larger margins anyway. So we should be pretty good. I mean, we're not going to get any forward guidance. So is there anything that's potentially negative for Tesla? Well, sure. I mean, you could argue that the relative strength index is at, obscene levels on the, the 1 hour chart, for example. If I go to if I look at the RSI for where we sat at the end of the day, we sat at 81. Okay, this is pretty high. You are ripe for a sell-off, if not tomorrow, then the next day or the next day. I have no idea. And again, I'm not wanting that to happen, but it would make sense why people would short it if they wanted a hedge against their longer portfolio. Point, though, is what's actually longer-term negative for Tesla? Well, what's longer-term negative for Tesla is Q3. Because think about for a moment what happened between Q1 and Q2. Q1 came in miserably low, oddly low, really, really low deliveries, which were very, very disappointing. But part of that was because the Model 3 Highland production was essentially shut off. So now what you really should do is smooth out Q1 and Q2 and then say, okay, we probably had an average of 418,000 vehicles delivered. You're averaging out Q1 to Q2. Because what we did in Q2 is we basically, burned through the backlog of inventory that we had. Okay, well, in that case, your vehicle delivery growth isn't that impressive. It's impressive on the quarter because you're comparing to a hole in Q1, but, that's also kind of convenient. It's kind of convenient that, hey, let's have a really bad Q1, bag the stock. Hey, I don't know if I want to be CEO anymore unless we get a comp plan, approved right before the vote. Hey, 8/8 Robotaxi Day. Hey, by the way, this quarter's going really good. We're going to do some special financing, and you're trying to pull everything into Q2. Oh, your vote gets approved. The stock goes up. It's easy for the judge to confirm it. I don't want to sound jaded, but let's just say, imagine you had the power to take a giant magnet, and you took that giant magnet and put it into one of the quarters in the year. Which quarter are you going to put that magnet into to suck as much money as possible into, given that one of those quarters is going to be a quarter that decides whether or not you get your stock-based comp? Well, I think between you, me, and the fence post, or the light post, since there's no fence post here, I think we can all guarantee it would be Q2 we would dump that magnet into. So we would poo-poo Q1, Q3, and Q4 because we want it all in Q2. So this is where there is a concern that Q3 and Q4 are honestly going to suck. Because think about this. Q3, we're probably going to get a buy the rumor, sell the news event on the Robotaxi. I am not long-term bearish on Robotaxi. I'm not as bullish as other people are, but we're going to get there. Honestly, I can't even complain about FSD anymore. Okay? And I'll complain about it because I give it to you straight. Can't even complain about it. It's very good. So I'm very excited about that. I know it does some funky things sometimes, and people are a little frustrated that why does it feel like we're getting 2 steps forward, 1 step back, blah, blah, blah. Everybody's always got to complain, whatever. But I think that's going to be a negative catalyst, in addition to the fact that in Q3, so far, we're not offering the better interest rate incentives. We're at 6.99 for the 3s and Ys, and those are the vast majority of vehicles sold right now. I mean, Tesla Evangelists, or whatever this person's name is, good on them to notice, we didn't really sell that many Model S's, Model X's, and Cybertrucks. I mean, 21,000 out of 200, or out of the 443,000, almost 444,000 is relatively low. So that could hurt margin a little bit, although the margin on the Cybertruck isn't that great anyway, so maybe they slowed that down a little. It's probably honestly the X's and S's, though, because who's going to buy an X or S when you could buy a Cybertruck for that price? I don't know. Honestly, I would buy the X again if I had to pick, because I want the FSD. See, I like it. It's a good thing. And look, I know there's a bunch of bullishness about AI isn't priced in. Totally agree with that. Optimus Robot, yes, I love it. Love the energy. There's so many icings on the cake that I just absolutely love for Tesla. But let's be real. In a high interest rate Q3 environment, when you just pulled forward everything into Q2 and you're producing at a slower rate, let's just be real. Q3 is probably not going to be anywhere near as grand as Q2, especially in this higher interest rate environment. And then people say, oh, but Kevin, the Fed's going to cut rates. When? November? Well, November is halfway through Q4. And what, a half, or rather a 0.25% cut is going to all of a sudden make people want to buy a car versus not buy a car? There's still some serious issues here. So is it possible that Cathie thinks that Tesla is getting a little bit ahead of its skis? Yes. Maybe she sees cracks in economy with rate cuts not coming soon enough, J-Pow today reiterating his patience, along with the likelihood that maybe there was an incentive to sort of magnet everything into Q2, and now you're going to have a poopy Q3 with a buy the rumor, sell the news event, and a 2.5-year TA trend that we might open green tomorrow, but revisiting that line tomorrow could be quite expected. We'll see. We'll see. I mean, right now, there's a lot of bullishness, okay? Volatility, first of all. Volatility on the 5-day right now, well above average. So options are very expensive right now. If I go to the 3-day average, I can't go that low. The 4 and 5-day average, I'm decently above average ranges. I'm above the 100-day, the 50-day, the 30-day. I'm above all of these. And I'm well off of the lows where we were previously. But in addition to that, if I look at the put-call ratio on Tesla right now, it's a 0.74, which basically means we are getting substantially fewer puts and more calls purchased on this stock, which, you know, is going to put some upside pressure on the stock. But eventually that sort of balances out again, and it just adds to being a negative catalyst. So you've got some issues here. Now, I know some people like to sort of wash this away and say, oh, well, you know, BTC is falling because of Mt. Gox and Germany and this, that, or whatever, and the only thing holding it up are BTC flows into the ETFs. That's possible. I mean, let's see, the BlackRock Bitcoin ETF. Let's see, that's the that's called IBIT. Okay, IBIT flows. Let me see if I can get the IBIT flows. Let's see here. You know, it should be a little easier to figure out exactly what all of the combined Bitcoin ETF flows are right now, but it ain't happening. So whatever. But people are arguing that the Bitcoin ETF flows are exactly what's keeping... Oh, here we go. Spot Bitcoin ETF flows. Oh, that's quite convenient. Ah, the block.co does this much easier than where I was trying to look. Oh, that's great. Take a look at this. They're suggesting that this is the only thing that's keeping Bitcoin propped up right now. But honestly, you're actually starting to get some outflows over here. That doesn't look too good. Let me go to the... Can I go to a 1 month here? Yeah, there we go. Oh, this looks like DNA, first of all. That's cute. But anyway, these are outflows. Look at that. I got outflows June 10th. So I don't know what they're talking about with this is the only thing that's keeping flows up. So far, going back to June 28th, this all looks like a set of outflows here. Yeah, that's not great. So, okay. Now, with that said, where am I on the bull-bear scale? Oh, yeah. Well, I mean, if you look at the greed and fear index, first of all, market momentum is at extreme greed. That's not great. We usually go back to the moving average. And so at some point, like, this momentum's going to stop. And I'm saying this so people are psychologically prepared for this. I'm not trying to be a bear, and I'm going to explain where I am on the bull-bear scale. It's not bearish, but I just want to be aware because I don't want to be caught with my pants down, all in on YOLO calls. All of a sudden, the market U-turns, and I'm like, what the heck? What's happening? Oh, it's going to bounce back. And then it doesn't, and then you get screwed, you know? So I'd rather be prepared. And look, if it moons and it keeps going, great, fantastic. Then you dump your shorts, you buy calls, ride that rocket ship, baby, no problem. But be aware, there's some issues here. Breadth we know is really low. Stock price strength, these are all bearish things. It is actually bearish to be at market momentum extreme greed. So you just need to flip this to bearish. And then all of this will end up going to fear. And then, of course, put-call ratio. Everybody and their mom is loading up on calls right now, which is also not good. So we've got some issues, some serious issues. And again, I do believe that if we can break through all of this BS that I just talked about, and we can get through a good Q3, and we can hold on to 231 and beyond, we are going to go to 258, and then we're going to go to 300. I would feel a bit more comfortable if we broke 231, held it for a while, got through our Q3, got through 88, and then we mooned. Because otherwise, I think we're setting ourselves up for a very painful fall. And I always get nervous when that sort of stuff happens for folks. You know, these 40% sell-offs that Tesla is known for having, they do damage to people psychologically. They're not good. So, again, long run bullish here. Short term, we really got to pay attention to what's going on over the next 3 days. What I'm describing to you does not have to play out as a bearish thesis tomorrow morning at, between 6:30 and 6:35. But it can play out over the next week. And if it plays out over the next week, I just want you to be aware of the resistance and why potentially some people are saying, you know what, this has gotten a little bit too far. Let's pull back a little bit. Anyway, check out the July 4th coupon code link down below. Thank you so much for being here, and we'll see you at the Market Open live stream over at the Meet Kevin Live channel. Thanks so much. Go to meetkevin.com to learn more. Thanks, bye.
not advertise these things that you told us here? I feel like nobody else knows about this.
We'll try a little advertising and see how it goes.
Congratulations, man. You have done so much. People love you. People look up to you.
Kevin Paffrath there, financial analyst and YouTuber. Meet Kevin. Always great to get your take.
Even though I'm a licensed financial advisor, licensed real estate broker, and becoming a stockbroker, this video is not personalized advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show shall not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purposes of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services we may benefit from. I also personally operate an actively managed ETF. I may personally hold or otherwise hold long or short positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuer other than HouseHack, nor am I presently acting as a market maker. Make sure if you're considering investing in HouseHack to always read the PPM at househack.com.